Okay, so let's go ahead and let's take a look at what is the second practice midterm. And number one, this section of the comprehensive annual financial report. Well, let me make this a little bigger. Let's see. Okay, right here, the section of the comprehensive annual financial report that presents tables and charts showing social and economic data and additional financial trends, fiscal capacity, and operating information, like the number of motorcycle helmets. I remember referencing the motorcycle helmet that are sold was the statistical section, right? And I pointed to your helmet. You were sat over there and you held up your helmet? Yeah. Right? Yeah. We went through this, right? No. Last time. Yes, we did. Okay, well, maybe I had a dream that we did it, because I have had, time where when I first start to fall asleep, I always slip into like I'm teaching a class. So I'm trying to fall asleep, and all of a sudden I start, okay, so now, scared myself. Okay, so, and then my alarm goes off. Okay, so if you're saying we didn't cover it, but remember we said that what? Everything you wanted to know about a government but was afraid to ask. And that was in that statistical section. And when I showed you the CAFR, remember, it went on and on and on, and it had all those trends and everything. Okay, what the sales have been over a series of years. Okay, good. Number two, expenditure to governmental fund would potentially include, potentially what? Not include. Make sure we've got the word not understood there. Okay, would potentially not include. Where's my not? Okay. Would not include, well, we have salaries as an expenditure. When we buy equipment, capital outlay is an expenditure as well, right? C, long-term debt principal retirement. We're going to learn this when we get to chapter 6 and we start talking about long-term debt. Payment of both principal and interest are considered an expenditure. When we get the bond, we debit cash, we credit what? What are the two other financing sources? Encumbrances are not another financing source. Encumbrance is a budgetary account. What are the two other financing sources? Transfer in and long-term debt financing, right? Okay, so if we sit there and we debit cash when we issue the bond, we credit other financing sources, don't we? When we pay the bond back, since there's no long-term debt for us to debit, we would have to do what? Debit the expenditure and credit the cash when we pay that. So paying off of long-term debt is an expenditure. Okay. Now, when you look at this last one, depreciation, clearly depreciation is expenditure, isn't it? Right? Okay, it's going to be one of those. All right, which of the following is considered a proprietary fund? The internal service fund is a proprietary fund, right? We have what? We have our GRASP, C, CAPI, our proprietary funds were the internal service fund and the enterprise fund, right? Okay. Okay, good. Number 4, which of the following uses the flow of economic resources measurement focus? So we have what? We have current financial resources measurement focus. That is the focus of the governmental funds, isn't it? Then we have what? Then we have our fiduciary funds and our proprietary funds that have a economic resources measurement focus, and then that's the focus of our government-wide statements. Okay, and so when we're talking about our economic resources, general fund, debt service fund, special revenue fund are all governmental funds, aren't they? So they'll be current financial resources measurement focus. Internal service fund is the one proprietary fund up here that uses economic resources. Number 5, in which of the following financial statements should a government not report depreciation expense? We do not have depreciation. We have no fixed assets. We have no depreciation for our governmental funds, right? And so the one governmental fund, well, they go by category up here. So the governmental fund financial statements do not have depreciation, right? Okay, I'm just going to roll since I'm not going to get any reaction out of you. If you want to stop me, let me know. Okay, number 6, government-wide financial statements include a statement of net position. There are 2 government-wide statements, a statement of net position and a statement of activities, right? Statement of net position is the balance sheet. Statement of activities is the income statement, what we call a statement of activities. Number 7, when the budget for the general fund is recorded, the required journal entry will include, and when we set up that budgetary account at the beginning of the year for the general fund, we would debit what? Good. Estimated revenue gets debited. Appropriation would get credited, right? And we would credit bud control, assuming, of course, that we have a surplus, right? If we had a deficit, then there would be a debit to budgetary control because our appropriations would be more than our estimated revenue. And so the answer clearly here is this credit to appropriations. Now, interesting here in that when you do these questions and you're doing them on an exam, your best bet is to sit there and just put together the whole journal entry. Where a lot of students fall into trouble is they sit there just sort of looking at that question, trying to figure out what's going on. If you sit there and systematically go through the entire journal entry, then you're much more apt to come up with the right answer quickly. So the long way is the quick way of doing this, okay? Okay, good. Come over and take a look at number 8. No one didn't return very well, so 8 is right here. When the budget of government is recorded and the appropriations exceed the estimated revenues, the budgetary fund balance account is, and let's just do the journal entry the way they're telling us. So we debit estimated revenue for, say, 1,000. And then we're going to credit appropriation. And they tell me the appropriation exceeds, doesn't it? So the appropriation is going to say be 1,200. Do I need a debit or a credit to make this journal entry balance? Good, debit. And so I'm going to debit what? Bud control here? Okay, so when I debit the bud control for the 200, is it correct that it is debit at the beginning of the year? And then when I go ahead and close that at the end of the year, what's my closing entry for my budgetary accounts? I just reverse everything, right? Debit my appropriation for 12, credit my estimated revenue for 1,000. Estimated revenue for 1,000 is a credit, and I would have to debit, I'd have to do what? Credit bud control. That says bud control for 200. So is it true that it was debited at the beginning of the year and then what? Credited at the end of the year? Okay. Okay, good. Number 9. Which of the following is true regarding other financing sources and other financing uses? And you can see here that the answer is A. Both must be reported separately from revenues and expenditures in the statement of revenues, expenditures, and change in fund balance. In other words, what? We have our revenues minus our expenditures. That gives us the excess of revenues over expenditures. And then what? We continue going, and then there is this sort of non-operating section in which we have our other financing sources and uses in a separate section, right? Okay. Okay, good. Come over. And let's take a look at number 10. Which basis of accounting for government should revenues be recognized in the period in which they are measurable and available? Measurable means we know the amount. Available means it'll be collected during the current period or within how many days? 60 days. Good. That is a modified accrual accounting rule, isn't it? Okay, when we're dealing with full accrual, we just worry about although we also worry about it for modified accrual, but we only worry about what? The eligibility and time when we're talking about full accrual, and we don't get into worrying about timing, right? So into collection, excuse me. And so what happens? The available criteria. So if we're dealing with the accrual basis, measurable and available is not relevant, right? It's only eligibility and time. When we get to modified accrual, which is used by the governmental funds, yes, we worry about eligibility and time still, but we also worry about what? Availability. In other words, the 60-day criteria that we've been talking about in here, right? Okay, so the answer here is D. Okay, expenditures, classification, public safety is an example of, and public safety is a program / function of the government. Does the government keep you safe? They try. There's some people probably being paid for by the government right now trying to keep people safe, sitting there trying to put out these fires, right? Okay, so that's a what? Public safety function, and the government tries to do that. Remember, we put label on our expenditures. Function and programs are things the government does. We have what? Character talks about the period of benefit. We have activity, such as building inspection. And we had object class, which was sort of like a chart of accounts, and we talked about all those in, I think it was chapter 2 or something. Okay. All right, good. I'm going to go ahead and sit down since I am somewhat blocking the view here, I think. Give me this little chair here. Okay. Which, when supplies are ordered for use in an activity accounted for in the general fund that are received at an actual price that is more than the estimated price on the purchase order, the encumbrance account is, now again, I'm of the opinion that you're better off sitting here and doing these problems in a manner where you do the whole set of journal entries associated with this transaction. It makes it easier for you to understand the question and get the right answer in the long run. So when I order the goods, what journal entry should I make? When I order the goods, I debit encumbrance. Good. And credit the bud control. Okay, good. Then when the goods come in, I do what? Debit bud control and credit encumbrance for the original amount, right? So I guess I should put some numbers in here. I'll put some numbers to make this a little easier. So I would debit encumbrance, say 1,000. Credit bud control, 1,000. When the goods come in, I debit bud control, credit encumbrance for the original amount, right? And they told me that it came in, what, for a estimated price that actual price is more than the estimated. So if the actual price was $1,200, then I would debit expenditure for $1,200 and credit vouchers payable for $1,200. Is that what happens? Okay. So is it true that the encumbrance account, when it was received, was credited for the amount on the purchase order when the goods are received? Okay. All right, good. Let's take a look at this one. Number 13. Got a weird wrap there, but that's 13. The account interfund transfer would be classified in the general fund statement of revenues, expenditures, and changes in fund balance. The transfer in is one of our two other financing sources, right? What's the other one? Long-term debt proceeds. Long-term debt proceeds. Okay. You want to? I mean, yeah, you could call it long-term debt finance. Yeah. Okay. I like that. Okay. And then what? And then we would have our one other financing use, which is transfer out. Okay. Good. Okay, so that's another financing source to transfer in, one of the two. The County Commission of Benton County, that's a little redundant. Why can't they just say the County Commission of Benton, adopted its general fund budget for the year ending June 30th, comprising estimated revenue of $3,200,000 and appropriations of $2,900,000. Benton utilizes budgetary accounts required by GASB standards. I'm a little suspicious of that. I don't know that they're required by GASB standards. I don't know that GASB standards call out these budgetary accounts. I think that it comes from some of these may be, but much of what we study in this class comes from the Government Finance Officer Association requirements. So we'll just kind of loosely accept that it's by GASB standards. But the journal entry to record the budget, well, let's just go ahead and do that. We would debit estimated revenue, $3,200,000. Credit appropriation, for how much? $2,900,000. Well, that's not going to work. Now it doesn't want to erase. Isn't that beautiful? Oh, knock it off. Okay. Well, to hell with you too. Okay. Oh, now it's going to win this one. Debit estimated revenue, $3 million. Credit the appropriation, $2 million, what? 900,000? Okay, and then credit what? Bud control for what? 100,000 we need here? 300,000, okay. 300,000? Okay, right? Okay, so is it true that we credit appropriation for 2.9? Okay. Okay, good. Same facts, and they say that the budgeted excess of estimated revenue over expenditures is a credit to budgetary control for 300,000. Okay. Okay, good. Number 16. Fund balance can be classified, and remember, when we have our fund balance, we can classify it into non-spendable for things like our inventory, and then we had what? We had spendable, and when we had the spendable, we had restricted, committed, assigned, and unassigned, right? There was no such thing as uncommitted. Right? Sounds like some kind of weird relationship, right? We're uncommitted, whatever, okay? So that's not one of the categories of our fund balance, right? Okay? Okay, good. Number 17. Which of the following will increase the fund balance of a government at the end of the fiscal year? Forget this question. I hate this question. I don't know why I ever thought it was a good question. Just forget about it. I don't want to even try to explain it. Number 18. When computers are ordered by the mayor's office, the purchase order should be recorded in the general fund. This cut off a little bit here. Should be recorded in the general fund. What's the journal entry when I order computers? Debit encumbrance for whatever the price is that I ordered it for. Credit what? Bud control. Good. So the debit goes to the encumbrance, right? Okay. If supplies were ordered by department financed by the general fund, and I think they mean are received at an actual price that is less than the estimated price, the available balance in the appropriation for supplies account will... Okay, let's just go ahead and let's look at an appropriations ledger. Okay, and if I have an appropriations ledger sitting here, and I get an appropriation, that's going to be a credit, isn't it? Say for 100,000. So this thing, and I wrote it too far over. Appropriations ledger, and I get an appropriation for, say, what did I say, 100,000? That's a credit, right? The appropriation's a credit. So the balance in this appropriations ledger, the balance will be a credit of 100,000, right? Now let's say I order some stuff. So I'm going to put my encumbrance in here, which is a debit. And let's say I order some stuff for, just making the number up here, guys, 70,000. Now the balance in here is how much? 30,000 credit? Okay, good. Then what happens? Then they say that it comes in an actual price that is less than the estimated price, right? So I'm going to say the actual price that it's going to come in is 65,000. Is that less than 70,000? So if that's the case, what would happen? I would credit the encumbrance here for 70, debit the budgetary control, debit expenditure for the actual price, which is what, 65,000? I said. And the balance in here will now go up to 35,000, won't it? Right? The balance goes up to 35. So is it true that the available appropriations for supplies increased? Number 20, the expenditure control account of a government is credited when, now remember, I have my closing entries that I have to make of my revenues and expenditures at the end of the period. So I would debit my revenues to close those, credit my expenditures to close those, and then I would go ahead, assuming my expenditures were less than my revenues were more than my expenditures, I would credit the unassigned fund balance. So is it true that the temporary accounts are closed at the end of the year? And you would close the expenditure account to close it? Okay. 21. Cartier Village capital expenditures during the year ended December 31st included the following information. What should have been recorded in the general fund and the enterprise fund for the increase in the equipment during the period? Now, what happens? You look at these choices. Is there any way that there was amount recorded for equipment in the general fund? Do we record equipment in the general fund? We do not. So D and C are automatically out, aren't they? And we look up here and we see vehicles for the electric utility. Isn't that an enterprise fund? So it can't be that they're both zero. So it has to be what? It has to be B. It has to be B. Now you know why I became an accountant, right? Okay, so it has to be B because what? Because we're sitting here and we can't have an amount in the general fund, and the utility we know is an enterprise fund, isn't it? Right? Okay, number 22. City of Grand, what is that? Mirage, whatever, Mirage. Fiscal year end on June 30th, 2017. They use encumbrance accounting. On May 6th, a purchase order was approved and issued for supplies in the amount of 6,000. So this is before the fiscal year ends. They ordered this stuff, right? Fiscal year ends June 30th. They ordered it May 6th. What's the entry on May 6th? When you order this stuff? Debit encumbrance. How much? 6,000. And credit what? Bud control 6,000. Okay, good. The fiscal year ends what day? June 30th. Okay, and they tell me that they issued the purchase order, but they didn't receive the goods until what? July 6th, which is in the next fiscal year, isn't it? So what do you want me to do on June 30th? Huh? Close the encumbrance entry? So you want me to debit the bud control? Like this? For 6,000? And credit what? Credit the encumbrance for 6,000 to close it? Like that? Okay, anything else? Say it again. You want me to debit, this is still on 630, isn't it? Right? You want me to debit the unassigned fund balance? For 6 and credit what? Assigned, I guess? For this stuff that we've ordered? That says assigned fund balance. Assigned fund balance is getting credited for 6,000. Right? Okay, good. Now that's on June 30th. What do you want me to do on July 2nd? Huh? You want me to debit encumbrance again? For 6,000? And credit what? Good. Credit bud control to set that up again for 6,000, right? Okay, then what do you want me to do? On July, we'll say this, we're doing this on July 1st. So this will be 7/1 when the new month or new year starts. What else do you want me to do on 7/1? Not 7/2, 7/1. Huh? You want me to credit the unassigned? Do you mind if I go ahead and debit the assigned first? So I'll debit the assigned fund balance. Make that a little bit better. I'll debit the assigned fund balance for 6 and credit the unassigned, you say? For 6, that's a credit of 6,000. That's a credit. Okay, good. And then what do you want me to do on 7/2? So on 7/1, just to review here quickly, we debited encumbrance, credited budgetary control to put the encumbrance back, didn't we? And we put back the unassigned fund balance, right? So we just reversed what we had done at the end of the year. We reversed it at the beginning of the year. Okay, now what do you want me to do on 7/2? When the goods arrive? Huh? Good. Debit bud control for 6,000, right? Credit encumbrance for 6,000. That closes the encumbrance for that, doesn't it? Now what do you want me to do? Debit expenditure, and the problem told me that it came in for the same amount, right? Debit expenditure for 6,000 and credit voucher payable, whatever, for 6,000. Is that the whole process? Okay, now when you go and you're answering a question like this, guys, you got 3 hours. You believe me, you are better off to go through the whole process than try and just isolate what it is that anyone questions asking you and work to that, right? So did we go through the whole process for this thing? Okay, so now with all that, what should we do on May 6th? Debit the encumbrance and credit the budgetary control? Is that what we did? Okay. What should we do on typo alert? What should we do on June 30th? On June 30th. I don't know why I put June 20th, typo. June 30th, we should do what? Debit budgetary control and credit encumbrance for $6,000. Using the same facts, what should we do on typo alert on June 30th? On June 30th. Debit unassigned fund balance and credit assigned for $6,000. Up here.
You went through the process and you went through July 1st and you debited, the encumbrance. You reversed basically what you did last month.
Yeah.
Is that necessary if we knew that the goods would arrive the next day? Can't we just do it on the next day? Does it make a difference?
It's necessary because we're assuming that we're preparing the financial statements at 6:30 because they had a 6:30 year end. So that's what makes it necessary, because 6:30 is the end of the accounting period. We have to generate the financials. We need to close out any encumbrances outstanding at year end and set up the unassigned fund balance for that. So yes, it's the fact that it was the year end that made it necessary.
So then you did it on the first day of the new fiscal year.
First day of the new fiscal year, I put the encumbrance back. Yeah.
You have just done that on the second too? Does it make a difference? You could just do it all on the same day versus doing one entry one day and just saving it for the next day. Just random.
Well, I mean, theoretically, what you're saying is correct, but that's sounding to me like an internal control problem. If you don't have a closing and an official opening of the next year, I understand that the stuff came in on the 2nd, but what if it came in, the same stuff came in June? Well, what if it came in June 15th of the next year? It could start to be a problem, right? So the proper way to do things in accounting is to just kind of laboriously go through all the steps. So this would be the way to do it. Close out those encumbrances, set up the assign so that you have closed out all the encumbrances for the previous year's budget, bring back the encumbrance that next year. Okay, so we debited the unassigned and we credited the assigned right there. We also debited budgetary control and credit encumbrances on 6/30, right? Those were both my 6/30 entries. Those are both my 6/30 entries. Okay. And then the question says, this is the question that keeps on giving, isn't it? I mean, it's like going to an ATM and money keeps coming out of it. I only asked for $20. Well, if I was going to answer one question, I'm asking 4 questions. This is great. And so what happens? They say, what should happen on July 2nd? And on July 2nd, we set the what? We go ahead and we have already set up the encumbrance on July 1st, and then on July 2nd, we debit encumbrance, credit the budgetary control, credit the expenditure, credit voucher payable, right? Okay. Okay, number 26. If a government uses the 60-day criteria for recognizing revenue under the modified accrual accounting, property taxes collected 90 days after 2017 fiscal year end would be, they are not revenues of the general fund using modified accrual accounting because they went outside the 60 days, right? They would be revenue for governmental activities at the government-wide level because we don't worry about the collectability there, right? It's just if we met eligibility in time. So C, no, yes. Number 27, which of the following types of non-exchange transaction recognize revenue when all eligibility requirements are met? And you look at B, C, and D, and it's imposed derived property taxes is also a form of imposed. And if we're sitting here and we're looking at those categories, is there worry about eligibility for that for those derived and the imposed? For derived and imposed, do we worry about eligibility? We do not. We only worry about eligibility for the government mandated non-exchange, and even for those, usually it's a reimbursement grant that qualifies us or makes us worry about eligibility. It's only when we get to the voluntary non-exchange that the eligibility really becomes a big deal, because we actually are applying for the funds, aren't we? Through some sort of program. Okay, but for these that are listed here, eligibility only becomes relevant for the voluntary non-exchange. Number 20, that's it. Okay. Questions? Okay, so the midterm is going to be what? On, let me pause this.